Hi, today is October 3rd. I want to give you a quick snapshot of what's going on in the real estate market in New York City, looking at last week and giving you a quick reporting on it. First of all, right now, there's 7,398 units that are on the market. That's 2% more than last week. But if we take a quick look over here, and I'm going to share with you some quick data that I think you might find valuable. The supply, the number of properties on market, this is this year. Very interestingly enough, we have right now the same number of properties on market that we had in 2021. This is below what we had in 20 and below in 19, right? What's important to note is with all the bad news out there about the real estate market and all the stuff going on, you are not seeing sellers panic and list their property in droves, which is keeping this market in somewhat of a stable shape. And we're going to discuss that a little bit further, but quite interesting. What about properties in contract? Well, right now you have in contract 2,908 units, and that's higher than we had both in 2019 and 2020. So really interesting to see that the market's really strong in terms of the total number of properties that are in contract. But what is very important to know is that we're looking at what's gone into contract over the last 3 months. If we look at every week going forward, you might see this start to slip down. The number of properties that are going into contract might slow. And the question is, are we going to look at like some past years where the number of properties in contract went up in September, October, and November? Did they go up because October, November are big selling seasons for us? Or are we going to see them go down based on what's going on with rates going up and what's going on with these macroeconomic factors really affecting our market? That's the big question. That's really what we're watching. And if we look over here, this is the market pulse where we measure demand versus supply, who has more leverage in this market. And what you're finding out right now over here is that we are actually now kind of officially in a buyer's market. And what that means is that we're looking at how much supply is coming onto the market versus how much supply is getting taken off the market, putting into contract. So super interesting to look at. It's not a terrible market by any stretch, but this was a very strong seller's market for a long time. And now it's crossing into buyer territory, which just means there's a lot of buyers out there. You need to be smart with your pricing. You need to get ahead of the curve if you'd like to get your property sold. And if you're a buyer out there, this is a great opportunity for you to continue and purchase. Now, what about new listings coming to the market? I told you we're still below past years with number of listings on the market. And this past week, we had less properties come on the market this past week than we have in prior years. So I expect that to continue. People are asking me about rates all the time. Just a quick understanding of where rates are right now. You'll see here rates have gone up. They came down a little bit, but now they're kind of back up there. Rates are obviously significantly higher than they were just a few months ago, right? This huge change from below 3 to over 6. And how are rates and why are rates going up? So this is one more thing that I want to close with over here is understanding, are rates going to go up? Are they going to go down? What's going to happen? Right now, where the rates are, it's based on where banks think the federal funds rate is going to be. And so if we look back in September 2021 or August, this is where we thought the rates were going to be in the future. This is looking at, we are now over here. So we thought rates were going to be around here. Then, of course, Fed said we're going to increase rates in May and increase. And now we're at a point where, based on our expectations of where, or based on the bank's expectations of where the federal fund rate's going to be, this is where they're expecting the federal funds rate to go above 4.5%. They're expecting it to go up here. And then they're expecting over time rates to go back down. Now, hopefully, when these rates go back down, you may see mortgage rates come back down as well. But if you find out that the federal funds rate ends up being higher than our expectations, or they announce they're going to increase those rates, everything's going to change and you should expect the mortgage rates to go up. We are telling buyers every day, the most important thing is if you find a property you love, buy the property, date the rate, because your rate could go down and you don't want to miss a great opportunity just because currently you're in this environment. So something quite important to look at. Lastly, let's talk about the luxury market. Well, the luxury market, we had 14 units that went into contract at 4 million and above. That's less than we would like to see in this market. It's less than we've had in other markets in the past. So something we're paying attention to. But still 14 did sell. And this is the highest price property that went into contract at 23 East 22nd Street, 1 Madison, $16 million property. And of course, beautiful property over here. If you know of anybody looking for a property with gorgeous views, a beautifully renovated apartment, or somebody that wants to renovate an apartment and make it beautiful, I have plenty of properties that I can show them. So please let me know if you know of anybody shopping, and I'd be happy to speak with them or chat with them about the market, which obviously you can tell from this video I enjoy doing. If you have any questions, please reach out to me about your specific property in general, or someone else that you know that might value this information. Thank you so much, and I'll talk to you soon.